Today I'll be going over Microsoft. This past week, the stock price has dropped around 3%. And so I want to see if with the drop in stock price, if it's a good value to add to your portfolio. I'm going to compare Microsoft with others in its sector, look at its fundamentals, determine the health of the company, share with you what I see as a price target and whether I'm buying or waiting. And lastly, looking at different chart patterns to see and predict where the stock price may be heading. And if you're here on my channel to discuss investing in stocks, ETFs, we'll also share my own personal investing journey with the hopes of inspiring you to start growing your wealth. Let's jump into Seeking Alpha. Looking at Microsoft, ticker symbol MSFT. The current share price is $261.12. Over the last month, it has fallen 8.42%, and just within the last week, it has fallen 3.4%. Moving over to its 52-week range, it is close to its 52-week low, which was $238.60, with the high being $349.67. Go down here, the current market cap is $1.91 trillion. Current PE is 27.73. If you're not familiar with what PE value is, it is price to earnings. So it's the current share price, $261.12, divided by the earnings per share right here, which is 9.42. So that'll give you the 27.73. Over on its growth, Seeking Alpha gives the revenue growth of Microsoft value of C+. Its ratio is 16.68%, and that's about 14.47% higher than the rest of its sector. Over here on its long-term growth, Microsoft has a ratio of 15.99%, and that's about 6.57% higher than the rest of the sector. So both of these are looking pretty good, being higher than its sector. Over on its valuation, for its PE value, Seeking Alpha gives it a C-, being at 27.73. It is about 51.41% higher than the rest of the sector. So hinting that it may be expensive. And over on its PEG, what PEG is your price to earnings divided by your long-term growth. So it'll be 27.73 divided by the 15.99 long-term growth we saw. So that gives you a value of 1.73, which is about 24.04% higher than the rest of the sector. With PEG, you want to really see a value close to 1 as being a fair valued company. The higher it is, the greater it is than 1, it's looked at being more overvalued, and a value underneath 1 be seen as the company being undervalued. Scroll down here, we can look at price to cash flow being 21.11, and that is about 23.37% higher than the rest of the sector. So at price to cash flow, this is basically the price you're paying for every future dollar of cash flow. You're paying $21.11 for every future dollar of cash flow that Microsoft generates. Next, looking at its profitability. For its EBIT margin, Seeking Alpha gives it A+. EBIT stands for earnings before interest and taxes, and basically it's how well it turns revenue into profit. So for Microsoft, it has 42.56%, and that's about 419% higher than the rest of the sector. So it does a very good job at turning revenue into profit. Over here on the dividend summary, for dividend yield, Seeking Alpha has 0.95%. And I'll give you an annual payout of $2.48. The payout ratio is 26.48%. And over the last 5 years, it has been growing that dividend at a rate of 9.49% and has been growing that dividend for the last 18 years. Over on Everything Money, want to look at the average free cash flow to see if Microsoft can continue to afford to pay this dividend. So 5-year average is $45 billion, and the amount of dividends they're paying is almost $18 billion. So they definitely can afford continue paying this dividend. Over on the income, looking at its revenue, for the last 5 years, it has grown from $105 billion to $192 billion. So almost double in the last 5 years, which is great. And it's been increasing every single year. Scroll down here to its net income, looking at how much it has been profiting. Going back 5 years, 15 billion, and right now about 72 billion. So about quadrupled that much, which is nice. Now scrolling down here, looking at its share buyback, want to see if it's buying back shares. So the more the company is buying back shares, the bigger piece of the pie you as a shareholder are getting. Right down here, $7.7 billion, and it's been slowly buying that back. So we have 67, 0.60, 0.54, and then 0.49. So definitely buying back shares year over year. Looking at assets and liabilities, want to see if it has more assets than it has liabilities. Go down here, its current long-term assets are $190 billion. Keep going for its liabilities. Its long-term liabilities are $104 billion. So that's a good sign to have that it has more assets than liabilities. Also, when we saw its average free cash flow was around $45 billion, it can definitely afford to pay off all of its debt within a couple years. Now we're on its cash flow, going on here for its free cash flow. See if it's been growing its free cash flow the last couple years. So right here, five years ago, $33 billion. Right now we're at $63 billion. So definitely been growing their cash flow year over year with an average of $45 billion. So that's really good that it's been continued to grow that dividend. If you're finding value out of this video, let me know by smashing the like button. And also, if you're interested in other stock analysis, consider subscribing to the channel. Let me know down in the comments below what your thoughts are about Microsoft and whether you have in your portfolio, or are you going to continue watching, or are you buying right now with the drop in share price. Over on the stock analysis, right now, the values I put in for my assumptions, trying to keep it conservative here. So since Microsoft is a big company, I don't foresee it growing as much as it has these last couple of years. So being like 20%, 60%, just being on the conservative side, I'm looking at 12, 11, and 12%. Whereas profit, we did see that its net income is increasing, and the profitability looking at Seeking Alpha was a lot higher than the rest of its sector. So I'm keeping around this 5-year range at 29, 30, and 31. Same for free cash flow, we saw that it is growing year over year, and the average is 45 billion. So I'm going to keep it around this 5-year average. So 29, 30, and 31. For its PE, I do want it to be around that 20 because it's a big company. So I have here 16, 18, 20, 16, 18, 20, because I do think it has room to grow with, of course, with the computer side. It has its cloud service, Azure, and also the gaming with the Xbox, and then buying the Activision. So I do want to keep it around that 20. And right here, just 10% return. So looking down here, we can see right here, we are underneath my high assumptions. So being 261, we are about $15 below my high assumptions. Right here for my mid-range is around the 230s. So I really want to see this around the 230s, the 240s as far as being a good bargain deal for me to jump on the bandwagon and buy Microsoft. So I'll be waiting around there. Over in TradingView, looking at charts for Microsoft, we see here each of these candlesticks are each representing one day, and I have 2 different momentum graphs here, and these are moving averages. So right now, kind of moving forward, what I'm looking at here is, you can see here lately, this purple line is 25-day moving average, and we tried to get through 25 and a 50-day moving average, and basically we just bounced back down. And right here, looking at this top momentum graph, we had like negative energy here and kind of got a little burst upwards. You see here return green, but that wasn't enough to get through these moving averages, just bounced back down. Kind of looking back into history, when we were able to pass through all the moving averages, we had positive energy right here and a nice trend upwards into this overbought region. But right now we're in this oversold area. So what I'm thinking, kind of going forward next days, couple weeks, we're most likely going to be, since we're in this negative energy right here, similar to how we were over here. So right over here, we're in this oversold area and had a negative energy right here. You see we basically stayed, we dropped a little bit, but kind of stayed in the same region. This was around the low 300s. We just kind of stayed in this kind of like bounced around for a little bit in this area. That's what I'm thinking is going to go on right now. Most likely staying in this 260. If the market keeps moving downwards, most likely we'll be dropping again, especially if we continue having negative energy go through. If there's not enough buying power to give us the strength to get through these, we're most likely going to be staying sideways or falling with the market. Starts up my analysis of Microsoft. Right now, I'm really waiting for Microsoft to drop to around the 230s price range before considering adding to my portfolio. Also, just remember, I'm not a financial advisor, so definitely do your own due diligence before considering adding Microsoft to your portfolio. And if you're looking for more stock analysis, definitely go check out this video on my end screen where I went over analysis of Apple. Catch you next video. Peace.